So you're ready to buy a house, and now what? I'm Blair Ballin with the Ballin Real Estate Team, and today I want to talk about financing. Some different myths that are out there, best practices, and all that awesome stuff. Let's get right into it. So the first myth, what do you need for a down payment? Historically, there's this myth about you need to have 20% down for a down payment, and I'm here to tell you, you don't. Can you use it? Of course. The benefit of having 20% or more is you avoid private mortgage insurance, which sometimes can be in the neighborhood of a couple $100s a month. But certain lenders actually have very creative ways to help you avoid private mortgage insurance while not putting 20% down. The reality is you can buy a home with an FHA loan with as little as 3.5%, and sometimes those programs are even more beneficial to buy now versus waiting to try to save up for a 20% or more down payment. So, big myth that's out there, you don't need it, and talk to someone that's qualified to let you know exactly what you need. Second, this isn't a myth, this is reality. Paying down credit cards. Now, if you don't have any balances, obviously not much or anything to pay down. But if you do have balances, make sure to pay those down as much as you can within your budget. When you speak with a lender about getting a loan, one of the things they're going to be looking at is your debt to income ratios. So your income is sometimes fixed. If you're self-employed, then it won't be, but otherwise it usually is. If it is fixed, what are your debts? And if your debts are these credit card balances that you have each month, and they're causing your ratio to go up or down, whichever way you look at it, then you want to pay those down. That helps you get better interest rates, better credit scores, all that awesome stuff. Which then leads to the next topic. You don't want to pay down a credit card and then get rid of it. That's not a good thing to do in the picture of credit scores. That will actually sometimes, if not always, bring your credit score down. Having that available balance and then creating a balance and then paying it down or off each month, that's one of the ways to build credit. Once you remove that credit card, now you've basically told the credit institutions, I don't have the available credit, there's not much for me to spend or anything, now your credit score comes down. So, pay down balances, but don't get rid of credit cards. Big difference between the two. Consult with a qualified professional when you're ready to discuss it. Next, might seem obvious, but still happens out there. Some people, while either getting ready to buy a home or while they're buying a home in the process of, they go out and buy a car. Believe me, I'm all for it. Driving nice new cars is awesome or can be awesome, but getting that new debt on your credit report right before you close on a home, not good. Don't do it. It could really, really damage your chances of getting a home. And along with that, I say car, but I mean other big purchases too. If you're going to think about doing those, save those for afterwards and then do whatever you want. Just get the house first. Next, rate and terms. What are rate and terms? So your interest rate and then terms. Do you have any points, as they're called, which aren't as common these days, or at least what we hear about in the purchase world. Refinance might be different. But when you speak with a lender or banker, broker, whatever, shop that interest rate. Are they giving you the best interest rate possible? And also, what are your terms? Is it a 30-year fixed, 15-year fixed, adjustable? Do you have to pay points? Whatever it is. Discuss that with someone, make sure you're getting all of your options out there and answered, and figure out what's best for you and your family. Next, touched on it briefly there, but broker and banker, big difference. Are you speaking with someone at a Bank of America or Wells Fargo, and nothing really against those institutions, but are they going to give you your best rate and terms? I would strongly suggest you speak with a broker, a loan broker, one that can shop your loan. This is kind of interesting. You might actually end up with a loan at Bank of America, Wells Fargo, or another institution like that through the broker, but because they send more deals, they get better rate and terms. So make sure you're talking with a broker. So you're in the process of buying a home. Your broker, your banker, whoever it is, has asked you to complete your loan documents and turn in certain things that you need, like pay stubs, all that stuff. Super, super important that you turn those documents in a timely fashion. Why? Well, because if not, that could delay the ability to get your loan. And then if you've agreed on a 30-day closing and now you've taken a couple days to turn in those documents, maybe your closing gets extended and maybe the seller doesn't agree to it. It doesn't happen all the time. But the important thing is when the person, the loan officer, banker, broker, whoever, asks you for those documents, do it in a timely manner. It will really, really help. Next topic. Local. I'm all about local for restaurants. I love local restaurants. But in the banking world, I do believe a local broker is going to be your best option. There's national bankers and brokers that are good. Local brokers, in my opinion, are the best. When you're ready to speak to someone, reach out and I can give you referral or referrals. Next, this is not a myth. This is reality and extremely common and misunderstood. Someone goes online, they check their credit karma score, and it comes back at whatever number. Let's just say it's 700, and they think they can go buy a home with a 700 credit score. Well, you know what? That's not what your credit score is, or FICO score. That's your credit karma score, which has very, very little to do with your actual credit or FICO score. FICOs normally are actually lower than the credit karma. So when you're ready to go buy a home, sure, go look up your credit karma score, but understand that that has very little bearing on what your actual credit score will be when you're ready to buy a home. Talk to a broker and have them pull your credit and find out what your actual credit score is. Big difference, very important to do. Leading into the next topic, let's just say you pull your credit karma score and it's 600. And you need to potentially work on that to be able to get a better credit score for a better rate and terms. Well, we need the time to do that in order to buy a home. It could take a couple weeks, but give yourself about 90 days. So, if your lease is up next month, sure, taking care of this now is okay, but it's best to give yourself 90 days before whatever timeline you have to talk to a broker to figure out what you need to do to your credit to improve it, to make sure you get the best possible rate and terms with a local broker and on your way to find the home of your dreams. Hope all these tips and talking about myths helped. When you're ready, reach out. I can help you find a local broker and I'll be here to help you find a home. Thanks for watching. Have a great day.